Given the adverse effects of global socio-political factors and disturbances related to infrastructure and resources, we will be discussing on global economic outlook for 2022 and beyond. Russia's invasion of Ukraine has not only caused an enormous humanitarian catastrophe, but an economic shock as well, significantly hastening the deceleration in global economic activity. The war in Ukraine is leading to high commodity prices, adding to supply disruptions, increasing food insecurity and poverty, exacerbating inflation, contributing to tighter financial conditions, magnifying financial vulnerability, and heightening policy uncertainty. Against this backdrop, global economic prospects projects that global growth will slow down sharply to 2.9% in 2022. Effects of the invasion, including more acute inflationary pressures and a faster pace of monetary tightening than previously expected, account for most of the 1.2% downward revision to this year's global growth forecast. Headwinds from the war in Ukraine are adding to large cumulative losses in output since the onset of the pandemic, particularly for commodity importing, emerging markets, and developing economies, known as EMDES. This chart shows cumulative output losses. Bar shows cumulative output losses over 2020 to 2024, which are computed as deviations from trend, expressed as a share of GDP in 2019. Output is measured in USD at 2010 to 2019 prices and market exchange rates. We can see that cumulative output losses for world scenario, it is less, somewhere around 20% to 25%. However, in considering EMDES or the emerging markets, output losses is very much higher. It's somewhere around 30%. And for significantly, it affects for EMDES commodity importers with the rate of 45%. Other than the pandemic-induced recession in 2020, this is the weakest year of EMDE growth since 2009. Growth forecasts for 2022 have been downgraded in nearly 70% of EMDEs, including the vast majority of commodity importing countries. With the exception of some energy exporting EMDEs, the majority of countries have suffered downgrades across all country groups. This chart demonstrates growth forecast revisions for 2022. Forecast revisions are the change in 2022 growth forecast between January to June 2022 editions of Global Economic Prospects. Data for 2022 are forecast. We can see that downgrade for the growth forecast is very much higher for advanced economies. It is nearly 90%. 90% downgrade of growth forecast is given for advanced economics, whereas for world scenario, it is somewhere around 70%. And for EMDS, that means for emerging markets and developing economies, it's somewhere around 65%. And for upgrade of growth forecast is favorable for EMDS and especially for EMDS commodity exporters. Global consumer price inflation has risen substantially around the world and is above central bank targets in almost all countries which have targets. Inflation is envisioned to remain elevated for longer and at higher levels than previously assumed. It is expected to peak around mid-2022 and then decline gradually as global growth moderates. However, additional adverse shocks could increase the possibility that the global economy will experience a period of stagflation, reminiscent of the 1970s, with tepid growth and high inflation. This demonstrates or depicts countries with inflation above target percentage of countries, Bar show the share of inflation targeting economies with average inflation during the course of the year or month above the target range. The sample includes 12 advanced economies and 31 emerging markets and developing economies. We can see that inflation above the target, when we consider the percentage, it's very much higher for advanced economies. Almost all the advanced economics countries are facing this challenge. And for EMDES, it's somewhere around 80% of the EMDES countries. However, from 2021 to 2022, we can see there's a steady increase for both advanced economies as well as emerging markets. Global Economic Prospects Report features simulations from a global macroeconomic projection model to assess key downside scenarios for the global economy. Simultaneous materialization of three scenarios would reduce global growth to only 2.1% in 2022 and 1.5% in 2023, 0.8% and 1.5% slower than the baseline forecast. This would bring the global economy to the brink of recession. And when combined with the heightened risk of persistently high inflation, raise the probability of stagflation. Chart 4 demonstrates global growth scenario as a percentage scenario outcome produced using the Oxford economics with global economic model. Scenarios are linearly additive. Aggregate growth rates are calculated using real USD GDP weights at average 2010 to 29 prices and market exchange rates. When we consider growth scenarios, in 2021, it's somewhere around 6%. However, now we can see for 2022 and for 2023, it's declining from 2% to less than 2%. In 2021, more than 190 million people had already experienced acute food insecurity. Improving access to safe and nutritious food and maintaining food security in times of crisis are critical for health and human development. To the extent possible, policymakers in EMDES need to refrain from responding to rising prices of food and fertilizers by adding to the already high number of price controls, which are often paired with subsidies. Trade restrictions should also be avoided and, where possible, pared back. Chart 5 depicts people in acute food insecurity in millions. Data from the Food Security Information Network's Global Report on Food Crises 2022. We can see from 2018 onwards the steady increase of acute food increasing, that the insecurity aspect. In 2021, acute food insecurity affected people are somewhere around 200 million. Reference for today's presentation is from World Bank's blog by Damien and Wheeler, titled as The Global Economic Outlook in 5 Charts. Thanks for watching.